2022 was a tough year for the Reno-Sparks real estate market. Interest rates went up significantly, we saw prices fall, inventory levels rose, and sales dropped. Are the rough times behind us, or are there more tough times ahead? Well, we're going to find out next on the Reno-Sparks Real Estate Market Update.
Assist you sell way smarter.
Hello, everybody, and welcome back to the Reno-Sparks Real Estate Market Update, this time for January 2023, first of the year. And actually, we're going to be covering numbers through the end of December 2022. So this is going to be a year wrap-up show for 2022 and a bit of a look ahead to 2023. Before we do that, though, a couple of things to note. Number one, this is for the Reno-Sparks metro area only, does not include Fernley, Fallon, Minden, Gardnerville, Carson City, Dayton, etc. If you do live in those outer areas and like more information on those markets, please drop us a comment, shoot us an email at info@forrenohomes.com. We'd be happy to get you all the stats and trends for those areas. This is for single-family residential properties only. Does not include multifamily land and lots and commercial properties, business opportunities, etc. Now, this is not intended to be specific advice for your home. Now, obviously, every area is going to be a little different here in the Reno-Sparks area. If you want to get more specific information on your home, visit our website, forrenohomes.com. You can click on the Find Out Now button here front and center, and we'd be happy to send you an automated valuation. It'll give you a good range of what your home might sell for today, but also we'll follow it up with a more detailed report for you and let you know what your home might sell for in today's marketplace. Now, as we always do, we're going to start out with the interest rates for a 30-year fixed mortgage. Interest rates have the biggest impact on home prices by far. Interest rates started out very low first part of the year at right around 3% and then shot up like a rocket ship first part of 2022 to a little over 5%, 5.5%, and then of course really took off to over 7%, one of the highest interest rates we've seen in nearly 2 decades. We've actually seen, which is good news, we've seen them drop down into the mid to low 6s. Now, the other chart we look at in terms of where home prices may be headed is the affordability index. And real quick, I had to read this chart. You look at the line across here, right here, which is at 100. That means the median household income earner can purchase 100% of the median price home. If this chart goes up and you see the numbers go up, that means the median income earner can purchase 10, 20, 30, 40, 50, 60% more than the median home value. So that means homes become more affordable. Now, when you see this chart drop below 100, that's not a good thing. If it's 90 or 80 or 70, that means 10, 20, 30% below the median value is what a median income earner could purchase. So that means homes become less affordable. Now, if you look at this chart from the west, you can see it's a little more ominous in that here's your 100 line right about here. We're down into the 60, 70 range, and that's where Reno roughly sits, which means the median income earner can only afford 70% or 30% less than the median priced home in the area. Speaking of median price, let's look at the median price. December is $519,975. Now, this is a combination of the Reno-Sparks area. The median price is Reno is slightly higher, slightly lower in Sparks, but overall the metro area, $519,975. Now, in looking at these charts, just so you know how these read, prior period, and we see this first number, prior period means the month before. So in this case, it would be November of 2022. Obviously, same period prior year would be December of 2021. So down 5.5% from last month, down 4.7% from last year. So not only have we lost all the gains in 2022 that we received or we got in this market, we're actually down from the start of 2022. Let's look at active homes. Now, these are homes that are currently on the market that you could go out and look at and potentially purchase today. We're sitting at 1,080. That's down 20% from last month, but up a whopping 120+% from last year, where we're at 489. Let's look at active by price, and you can see the majority of actives are 4 to 5, 5 to 6, and 6 to 750. New listings. Now, what's the difference between new and active? These are just the number of listings that came on the market. That active number that you see is active. Some of these homes could have been on the market for 2, 3, 4 months. It could have been listed in September, October, November, whatever. These active are just the ones that were listed in the month of December, where there's 311 new listings that came on the market. That's down 12 8.6% from last month, where we're at 356. It's down 18.8% from the same time last year, where we're at 383. So you can see this number fluctuates along with the market as well. Now, new listings by price, you see the majority of the 4 to 5, 5 to 6, 6 to 750, and so on. Now let's look at closed listings. These are the number of homes that sold. So this just means they closed escrow, changed ownership, sold in the month of December 2022. 394, that's down 14% from last month, and a whopping 40% down from the same time last year, where we're sitting at 662. Now again, this number does fluctuate. What worries me a little bit is you can see the peak in the number of sales for 2022 actually, believe it or not, took place very early in the year. We did see a little bit pop here, but we're actually dropping well below in the number of sales, well below the trend lines here. So we're seeing less sales at the peak and a lot less sales at the bottom. Now let's get closed by price. You can see very few sales at $1.5 million plus, a little bit more in $1 million to $1.5 million, 750 to 9, and so on. The majority of sales here are taking place between 400 and really 650, 700 is where the majority of sales are taking place. Months inventory, just a quick explanation on this. This just means if you have, let's say, 500 sales a month and you have 1,500 homes on the market, that would be 3 months of supply. It would take you, if no other listings came on the market, it would take you 3 months to sell all those homes on the market. So this is just a good metric to look at in terms of the overall health of the market. Right now we're sitting at 2.7 months. Now if you look back at the trend lines back basically a decade, we're really between 2 and about 3.5 is common. You can see it fluctuates 2.3, 3, 2.8, and so on. So we're right there in what would be considered more of a normal range of supply. However, the story does change quite a bit when you look at inventory by price range. If you're in the $1.5 million, well, you're firmly in a buyer's market at over 11 months inventory. You're approaching buyer market territory at 750 to $1 million and $1 million to $1.5 million. You can see we've got about 4.5 plus almost 5. We're approaching the 5-month territory. Now, if you get below the 750 and you really get down to the 4 to 5, you only got a couple of months inventory to just shy of 3 months inventory at the 6 to 750 range. So it really is a story of price range. Upper end price ranges are going to be tougher to sell. You have a lot more competition, a lot more inventory. You're going to see prices probably fall or tighten up there more so than you would in other areas. Now let's look at one last chart, and that is unsold homes, unsold listings. Now these are listings that were on the market for a period of time. Sometimes that may be a month, 2, 3 months, 6 months, whatever, and they never sold. They went off the market, they went expired, never sold. We're sitting at 245, which is up 10% from last month, but up 295% from last year. Now, why is this significant? Well, if homes are not selling and sitting on the market, it's usually because, well, people can't afford them. They're not worth what they're asking. So that's when you start to see prices fall a bit. If you're thinking about selling or even buying a home, check out Assist to Sell. We have a whole inventory of homes that we can show and sell you today. If you're thinking about selling, we actually sell homes for only 1%, and if your home is under $400,000, it's only $3,995, which is significantly less than you would expect to pay from other full-price real estate companies like 6 or 7%. There's no reason to pay high commissions. We've been in the area since 1987. We've sold thousands upon thousands of homes. We've saved local homeowners millions of dollars in fees that they've put right back into their pocket. We know the economy's tough right now. Inflation is up. Gas prices are up. So don't pay high real estate fees. Give us a call, 688-6060, of course, area code 775. You can reach us at our email, info@forrenohomes.com. Hope your 2023 is off to a good start, and if we can help you in any way, don't hesitate to reach out. Until next time, bye-bye.
Assist to sell way smarter.